You can buy a home with zero down payment. Is this true? It is true. There's down payment assistance programs that are available for first-time home buyers. There's also the VA loan that offers a zero down payment. However, we have to consider the fact that listing agents and sellers have multiple offers that they're reviewing. Many of the other offers, or maybe if there's even one other offer, that buyer has a better deal, a better offer, a stronger proof of funds. It's hard to say. Here's what you gotta do. When you're buying with down payment assistance, it matters more than ever the realtor that you're working with and the lender that you're working with. There's no way a listing agent and seller is going to accept your offer against somebody else's offer unless there's a huge reason behind it. And that reason can absolutely be the other realtor and the lender. If their offer is similar to another offer that they're competing against, and the listing agent knows, likes, and trusts the other agent, the buyer's agent, and the buyer's lender, of course, they will absolutely work with them. The listing agent, if they have two of the same offers, and the only difference is one's using down payment assistance and one's not, why wouldn't they work with someone that they like versus someone that they may not like? So yeah, it makes a difference. The agent that you're working with, the lender that you're working with, are they liked by the community and the other agents? Yeah, it makes a big difference, and it's gonna help you if you're buying with down payment assistance. Looking at homes before you're even approved? What are you, crazy? This is all about pre-qual versus pre-approval. Yes, it's true, there are people out there looking at homes without being completely pre-approved. If you're one of these people, it's okay, don't worry. But in the market such as the one that we're in right now, you need to be a little further along in the process. Your income, assets, everything should already be reviewed, signed off on. You should almost feel like you're buying the home with cash. You're basically already gone through the whole approval process. In this market, make sure more than any other time that you are trusting in your lender. Make sure your lender is maybe local, maybe reputable, and following their lead. They'll tell you to get a pre-approval. They want you to because it helps them, it helps the realtor. So make sure you're getting a full pre-approval. If you can, ask for an underwritten pre-approval. We offer the fully underwritten pre-approvals for our clients. It's peace of mind for us, it's peace of mind for our clients. And when their offer is up against other offers, it gives them the advantage. And we need that to get the offer accepted. When you're buying a home, the two most important factors to look at are monthly payment, that's total monthly payment, and then it's total cash to close. I did not say down payment. Yes, down payment's a factor, but it's not the most important thing. I hear that on the weekends when I'm working at the developments. We're always calculating down payment, but we're not calculating the total cash to close. And so this is important because when you're looking at a home, you need to know what your monthly payment is for your budget on that particular home. So the principal, interest, tax, insurance, and anything else, what that payment's going to be for the home, and then what your total cash to close is going to be. It's not the down payment, it's the down payment plus closing costs plus prepaids. That in total is your total cash to close. Total monthly payment, total cash to close. These two numbers are going to help you lock in the purchase price. So if you're out there shopping for a home just off of purchase price, that's kind of backwards. You need to make sure you've locked in your pre-approval based off of the payment and your total cash to close, that you have enough to cover and more, and that gives you the purchase price range that you're shopping in. Oh, guess what? I saw online an interest rate of 1.99%. What? Guess what? Now is not the time to be shopping online for the lowest interest rate if you're trying to buy a home. Really, it's not. Rates are on the move, and the internet shopping of interest rates is not a good move. You need a reputable, well-known, experienced loan officer, lending partner, and realtor in order to be able to purchase in this market. Your real estate agent will probably refer you to the right lender, someone that they trust, someone that they know can get the offer accepted and help you move along and close on time. In terms of interest rates, they're not all the same, but they're all very close. And so if you're getting a conventional loan with one lender, Quicken, versus a conventional loan, the rates are not going to be that far off. One of the loan officers is working out of a call center in Detroit, and one of the loan officers is working in your local community. And when it comes down to it on a weekend, when you need to talk to your lender and you need to make sure that your deal is going to close on time so that you can get your keys and move in, you want that lender to answer the phone, and you want them to be local and accountable. So picking the right lender is super important when you're getting ready to buy your first home. And guess what? I'm qualified to buy a home for $1.5 million. But is it really going to work out for you? Affordability versus what you actually qualify for are two different things. Take it from a lender. So when we complete your pre-qualification or pre-approval, we are looking at your gross income. Your gross income. I don't know about you, but half of my gross income, gone, taxes. Then I also have insurance and all this other stuff that comes out of my paycheck, right? So when you're planning to buy a home, plan it out in such a way And if you're dealing with me, we've already done this, but you're going to talk to your lender and they're going to talk about what your affordability range is. It may be different from the range that you qualify for, okay? You may qualify for something much higher than what you actually feel comfortable with paying. It's important to have this discussion early because if you need to make some changes to your budget, then you need to know that before you get into contract on the purchase of your home, okay? So do this planning up front. Your lender should help you with that, and you'll be in the perfect position to buy a home and comfortably make your payment on your new home. Cash is king. No, I don't mean you have to buy with cash. You can finance the purchase of your home, but you better have your liquid funds available, ready to go, and showing all nice and pretty in the bank account, right, on the statement. Reason I say this is when you submit your offer and your pre-approval letter, you're also going to provide proof of funds. Proof of funds is something that the seller and listing agent, they're going to look at that and they're going to want to see where your cash to close is coming from, right? And they don't want to see $2,000 at Bank of America, $4,000 at Chase, $6,000 at Allied, and then the rest in a 401k and E-Trade and Robinhood. They don't want to see that. They just don't. If they have an option of selecting that offer with all of that going on and another similar offer with just all of the funds available in the Bank of America checking account, it's going to be smoother over here. So cash is king. Doesn't mean you have to buy a home with cash, but have your assets liquid and available before you go shopping for the home. It's tough for us as a lender when we get kind of a last minute pre-qualification and the buyer hasn't moved their funds to the liquid source. So preparing in advance, getting those funds over is going to give you the advantage that you need to get your offer accepted in this market. Wait, you're telling me I have great credit, solid income, and plenty of funds in the bank, and I have to pay this funding fee, this mortgage insurance thing up front, this expensive financed mortgage insurance thing? What I'm talking about here is FHA loan. FHA loan has financed mortgage insurance up front in the loan, and then you also pay mortgage insurance with your monthly payment. You're going to find that a loan with less than 10% down, less than 20% down actually, is going to have mortgage insurance. And so differences in types of loans are going to have differences in the mortgage insurance. I like to think of FHA loan, which is a government loan, as a one-size-fits-all type of a loan program. It's really good for anyone to buy their first home. It's not great, but it's good for anyone to buy their first home with an FHA loan. It's not a loan that you can have forever or that you would want to have forever because the mortgage insurance stays on there. It's also a little bit more expensive for the mortgage insurance, but it's more flexible in qualification. Conventional loan, if you have excellent credit, you'll save money getting pre-approved for a conventional loan versus an FHA loan. You'll also save by not having to pay that upfront financing fee for the mortgage insurance. So there are different types of loans. They make a big difference. One size fits all is not great for everyone. And if you've worked hard to keep your credit super high, then talk to your lender about buying with conventional financing or one of the other programs that might be a better fit for you.